This is Market Week Live, our pilot show, October 20th, 2023, information and support for traders and investors. We have just a little bit of legal to do before we get going. This says that all the information that we provide is entertainment and educational. That's what the purposes are, no matter how we present that to you. And we always want you to consult your own trading plan and your own financial professionals before using any of the information that we have or before making any of your trading decisions. Our live events, our support for members, these are not included in our memberships, but we're going to keep bringing them to you because we know that they're going to help you, and that's what we want to do because your success is our success. Everything that we do is recorded. It will be offered for public viewing in the case of the Market Week Live shows. We always want to hold your identity as members completely anonymous, but certainly we're not going to be able to do that, especially in these live shows. So your participation is an acknowledgement that you do understand that. You can get our full legal at askSlim.com. Our hosts today are our full analytical team. That's me, Steve Miller. I've been around for 50 years. It will be in February as a trader, which is just phenomenal. A member of the CBOE starting in May of 1974. So May of 2024 would be my 50-year anniversary. And we're going to have a big party. Hopefully you'll all be there. Matt Serpe, been with me for, seems like forever. It's all the way back since 2005. RV been with me for, I think, at least 10 years now as a viewer on the Tasty Trade show that I did. And Katie has joined us as an expert in our style of analysis, cycle analysis, and also in option trading. So she is our lead in that area. You can find out information about us by going to askSlim.com, about askSlim, meet the team, and there are interviews from all of us in there. And that is hopefully something that you're very interested in. I'm noticing Katie just kind of disappeared off the screen, so hopefully she'll be able to get back in here. And there is no issue. All right, so this is our contact information for those of you that are not members and you're interested in becoming a member or you have website issues if you're a member. You can write to team at askSlim.com. Anything, all the information that we have, you can write to Matt at askSlim.com and he'll be able to answer any of your questions. Coming up, I'll tell you about what's coming in the show in a moment. Remember, if you're brand new, and you can get acquainted by signing up for SIR Lite, that's free. You'll be able to get information about the markets, about the stock market, every single day sent to your email. So it's a good way to really get acquainted with us. If you're on YouTube, do subscribe to the channel, click the notification bell, and like the video if you're watching this as a video on YouTube. And on X, follow us at askSlim. Any questions, again, write to Matt at askSlim.com. Coming up in this show, I'm going to bring you my opening comments on the market. Maybe there's something that you'd be willing to buy, especially as an investor. I'll show you that. Matt's going to bring you an introduction to our products and services. We'll have our express round where we're going to take your questions, a Q&A. Now, the whole team will be in there to answer your questions, but those are for level 1 to 4 members. They are actually participants now in this event. If you are watching this live on YouTube, you won't be able to participate, but you're encouraged to become a level 1 to 4 member, and then you'll be able to participate in these live Market Week shows. So you'll be able to, we'll be answering your questions. I want to remind people to put their questions up in that area of the Q&A, and then our team will be taking them. We're going to have a Q&A that's going to run about 20 minutes. So please do put your questions in there about any specific analysis that you're interested in, or anything else, whether it be trading issues, I'll answer those, or maybe even trading psychology issues, which I'll be glad to take from somebody if you have those kind of issues. Then I'm going to join Matt in an introduction to the new day trader service. I see already a question in there about the service, and you're going to be just so impressed by what I'm going to show you, what Matt's going to show you in this amazing service that we're bringing out just in the next week. Then I'm going to bring you my stock market analysis. We'll look at multiple time frame analysis in the Russell. SPX, and then DX, and all the time frames, and I'll bring you our proprietary indicators. So just a lot of stuff coming up in this great pilot show. I want to welcome all of you into this show. I hope that you are going to love that we're doing this live on Fridays. Twice a month is what the plan is right now. So we'll have a regular Market Week show once a month, and then once a month we'll be off. So it's going to be 3 Market Week shows each month. And then, of course, our members will be able to, especially level 3 and 4 members, if you have any questions on those off weeks, you could still send those to us. So we'll be glad to answer those questions. So right now, our members are in here participating, and YouTube is watching us live all over the rest of the world. So please do put those questions in the Q&A, members, and we'll be glad to get to that. So lots and lots coming up in this show, and I hope you absolutely love it. So here's my opening commentary on the market. You're very used to me doing this in the regular Market Week show. It's going to be a little shorter, but I still think it is important for me to give you this little update to the markets as we go. And as we know, the stock market has had a very rough week, and there is plenty of news in the background. Following the horrors of the Hamas attack on Israel and the impending ground attack and the humanitarian crisis that we see in Gaza, the markets, the world is really on tinder. It threatens to expand as we see missiles being shot that the U.S. is shooting down, and a rocket that was aimed at Israel that was shot by Hamas or one of their affiliates hits a hospital and kills hundreds of people. And that was proven to be shot by them, not by Israel. However, that has still been reverberating with all kinds of demonstrations all around the world. And the world seems ready, sadly, to explode. That's weighing on stocks, of course, and techs had a bad week as the chip export the exports on chips, especially AI chips, have been even more restricted. So especially that's on sales to China, and that has been a weight on the NASDAQ index. Apple down some 12% now off of its highs. That's about 2 times what the NASDAQ has fallen, is all about poor sales. It's now 4 quarters in a row that Apple has had lower revenues, and the earnings coming out in just a week or so, that the fear is that is going to continue to get worse. You also had NVIDIA with a rare downgrade, and that has weighed on the tech stocks. Also, financial stocks getting hammered as Morgan Stanley was down 8% on its earnings day, and that really hurt that group. And United Airlines down 8% on its earnings day as it had a beat, but it really did warn going forward, and that killed the transportation index. So there is so much that has been weighing on the markets in here. And of course, this all comes just maybe not surprisingly during this period of risk that we have talked about, that we said for a couple of months or a few months out there that we thought that October into early November was going to be a time when the market energies were subject to a large decline. And that certainly has happened here. Now, you might say that, well, the Middle East conflict that's going on kind of made us right. But Avi and I were actually discussing even yesterday that it's amazing how the news just kind of fits into what the cyclical patterns are so often. And maybe it's just that this particular time the news is terrible. But other times when the market is susceptible to moving down, it doesn't take a whole lot of news to get it to move down. And the same thing for markets that are really in good shape. We've seen it climb the wall of worry, as they say, and that's when bad news comes out and the market just won't go down. And that often happens in rising phases when money flows are subject to the market moving up. So this has been a period of risk, and we see that that has been what has happened. But there's always something that somebody wants to buy, and I kind of want to look at something right now, especially for those people that are longer term investors, or you're looking at things to put into your like a safe haven decision that you're going to make, or things that you want to put into your 401ks or IRAs, or just to look at something that may be a little bit safer. First thing I want to look at here is the Dow Jones Utilities. Now, this is something that bores the heck out of most people. It certainly bores the heck out of me, and I don't normally look at this to trade, because somebody like me who grew up on holding periods of less than an hour, you don't really tend to look at utilities. Yeah, my holding period was probably less than 15 minutes when I was on the floor, it seemed like. But this is very clear that we're looking at. For those of you that are brand new, we're cycle analysts. That means we look at the energetics in the market. It's when the market should be rising, or because money flows are moving in, or it should be peaking or declining or bottoming. That's the four phases that we look at. And what I have highlighted right in here are the rising phases. That's these green areas. And you can see in here on the bottom are cycle brackets. For those of you looking at this, these are the energetic movements in the market. It doesn't mean that when it's rising that it's necessarily going to be rising. As a matter of fact, you could see right over here where the cycle was rising, but that rising phase only lasted about 7 or 8 weeks. And then the actual price was declining, which meant that the translation of this was such that it peaked early, and then the rest of the cycle was moving to the downside. Still, we're in this period where it bottoms right over here, and you can see right there that we're starting to get that upside move. So what this utilities is telling you that, well, it looks like it's in a relatively good shape compared to some of the other indexes we look at, because most of them are looking like they're still in a declining phase, whereas the utilities look like they've bottomed. Now, of course, we know that utilities are massive borrowers of money. And what that means is that when interest rates go up, they get choked because they have to pay more money for what they borrow. But when then interest rates start to peak or go down, then the utilities tend to do better, and especially when money gets parked in a safe haven. So that means that when we're looking at utilities, we should also be looking at the Treasury market. I'll take a look at this. Note the source on the bottom, where these things came from. This happened to come off of X at Kurt Salrichter and out of Bloomberg and Deutsche Bank. And what this shows you is the absolutely massive net short position in the Treasury market. This is just beyond any kind of a comparison, as you see in here. And what this means is that there's probably a short squeeze ahead in bonds, because there is such huge short positions out there. And this is really fodder for the utilities doing better. That's why I wanted to bring this together right now for you to see. If that's the case, we should be projecting at some point fairly soon a peak in interest rates. Well, we're going to do that. This is our utility average. And this actually is, I have that titled on the top incorrectly. This is the TNX that we're looking at right over here, and we're looking at how that would reflect opposite of the utilities. In other words, when the rates are going up, utilities are going down. And we're looking at, you see this label right over here, the ZNs, that's the 10 years. Ideal weekly trough, in other words, where they should make their bottom, is at around 11/20, November 20th. It's usually plus or minus 3-4 days. So a week one side or the other. And that means at the same time, the 10-year weekly ideal peak would be around the same time. So somewhere in here in the next, we'll just call it 3, 4, 5 weeks, is likely going to be the peak in the yields. That's when you could get that short squeeze in bonds. That's probably when we're going to see some softness finally coming into the market, which Powell came out and said today he really wants to engineer, or he said this week, because he says that the economy is still strong, of course, employment is still strong, and they're keeping on the table another rate hike. So that's the case. We're probably going to start to anticipate the economy slowing down, and we're probably then going to see those utilities then beginning to move to the upside, as you see here, and that potential short squeeze in the treasuries right there. So the question is, if you're real conservative, do you buy those do you buy the utilities, or do you look to buy the treasuries all on their own in just the next couple of weeks? So I wanted to bring that to you. I thought that was really important to look at as an opportunity. For the week, what we're looking at here is the stock market down between 1 3/4 and 2 1/4% on the indexes. Bonds, 30s, they lose over 3 points. The 10-year yields up 30 basis points. This was quite a week of higher yields and weak treasuries. Gold market, which you would think would really suffer from those higher yields, as it often does, gains $50 for the second big week in a row. And we have the dollar losing about 0.3% as that has stalled and began to move sideways. And the oil market gains about $1 and is in resistance after rebounding with all of the Mideast crisis that's going on. So that is the look at the markets and my opening monologue. And now I'm going to turn this over to Matt, because he is going to bring his review of some of our products and services. Matt, take it.
All right, thanks, Slim. That was great information and analysis as usual. Well, welcome everyone. Excited to be part of our pilot show and have all of you attending today. So in this brief segment, I'm going to provide an overview of the askSlim methodology and our premium membership services as a segue into the really fun part of the show, where we have the interaction with our members, and they can ask questions about our style of analysis and see us in action. All right, I'm going to share my screen. Okay, so as I mentioned, I'm going to review very briefly here the askSlim methodology and our premium membership services. So our mission at askSlim is to deliver world-class technical analysis services, trade planning tools, education, support for the active trader and investor. Our services are specifically designed to optimize your trade planning process. As traders, we want to be able to put the odds in our favors. We want to be able to set up trades where we have those odds in our favor. And so how do we do that? Well, we need to be able to identify and determine key technical evidence. First, we have to start with our outlook period. What's that outlook period for your trade setup? It's critically important that you define what that is, because everything sort of follows suit from there. Next, we need to be able to determine the directional bias for that outlook period. Then we move into our key price levels, and you want to have a very good sense of timing, but not only of pattern, but also timing in terms of signals. So what are those signals that are going to suggest to you that trade setup is a go? So all of our services and our trade planning tools are designed to help optimize that trade planning process for you. We have 4 premium levels here at askSlim that provide the technical analysis and trade planning. Level 1 essentially gives you an introduction to our methodology, which includes our cycle analysis and momentum studies. As many of you have probably seen before, or if you haven't, that level 1 takes a very deep dive into the application of our methodology around the indexes, the Spider Select groups, and then we have a longer-term proprietary momentum tracker where we have over 1,000 symbols where you can apply our momentum studies on that. So that is level 1. Level 2 builds on that, where you can immerse yourself with us into the askSlim methodology, very much so dig deep, learn about it with us, and then you get to access our custom charts hub. So we have a universe of stocks where we do our proprietary cycle analysis on, and we share those in a static form in a awesome and fully accessible charts hub that our level 2 and higher members get to access. And you start to be able to see and learn our askSlim trade planning process in action. And then in level 3, this is where you really start to be able to utilize our cutting edge trade planning tools, and you get to participate in more events with the analyst team on both Zoom, Discord, and you get to see that methodology in action because we have live streams happening with several of our key symbols that we track, including the indexes, the index ETFs, and several Spider Select symbols as well. So you get to have access to that, access to the analyst team on a daily basis via Discord as well. And then level 4 is all in. It's our top tier level. It provides direct access to all of our custom chart analysis and our proprietary suite of indicators. It's really an immeasurable amount of value that goes into what you get out of level 4, since you do have that direct access, and you get to really take that ride with us every day as we do our work and share it with our members. And it includes the newly released Market Conditions Monitor, which is an amazing companion trade planning tool. If you haven't checked that out, we have videos on that, and I do live sessions on that as well for free members, maybe once or twice every quarter. So level 4 gives you that deep dive into everything we have, and not only deep dive, but you get that full access. So to wrap things up, at askSlim, we're pure technical analysts. We're bull bear agnostic. We let the charts do the talking. We utilize Slim's unique cycle analysis, which has been in development for over 6 decades. This method has evolved, and we've combined it with custom momentum indicators, swing high, swing low techniques, and we perform this at multiple time frames. So at the end of the day, what this gives you is the ability to generate technical evidence that allows us and you to project in time, price, and direction. And this is a great segue to our next segment, where you're going to be able to see that in action as you do with the Q&A with our team. Back to you, Slim.
You're
Slim, I
on
think
mute, Slim.
jump back on, Slim. There we go. All right.
Okay, got just a little second here before I take that back from you.
Sure. Those members that are with us, feel free to continue to put those symbols into the queue.
All right, you should see Q&A.
Yes, we do.
All right, great. All right, so we're going to get into this. What we normally do is that if there's questions on any of the futures, I usually take those. And we have RV and Katie taking the questions that exist on the ETFs or equity side, and any questions that may be out there on just trading issues. Well, any of us can take that. If you have anything on as far as the emotional side of trading, I'll be able to help you with that also. So let's, RV, have you looked at these here?
I have, yep.
Okay, you want me to go first? I see a couple for me.
Fine. Yep, go ahead.
Okay, so we're going to, I have a question on Bitcoin and gold and light crude. So let's switch over to that. And you should see light crude up there right now. And let's just look at this. Now, this is interesting. The cyclical patterns in here on the daily chart are just clear, except what happened was that really based on the war starting in the Middle East, we did get what looks like a potential early bottom in here, because we were looking for one more move to the downside right over here. But you can see that it does look like it began to move up sharply in here, and now has gotten up to this resistance area. But still, we're in this cycle right over here, both cycles, when they'll be moving up. So were there to be a pullback in here, I would expect them to move up again. So looking at this right in here, you can see that the second low that we were looking for in here really looks like it's erroneous. So we're going to pull that out of here, right there, just so you can see what we do. And it really looks like this low right in here was the low. And you can see that's now what it looks like. So the low made right over here and just a little bit early. And now we're in this rising phase. I want you to note the slim ribbon momentum is turning up right over there. And the slim ribbon PO on the bottom turn green. Slim ribbon PO is a proprietary level 4 indicator. If I look at the weekly chart here, you can see that, again, this came down, and it looks like it was potentially a late trough, but was it early here based on that war? We don't really know for sure. It doesn't really matter. We are in the rising phases right here. And that says if it pulls down, it's likely not to get to a lower low and then be moving up again. Projecting now to move up here to 97 to potentially way up over there at about 102. But for now, I wouldn't be surprised to see the momentum in here on the reversal scout. Again, another slim ribbon proprietary, askSlim proprietary indicator. This momentum is not turned up yet, so it could be a little bit sloppy right in here. But were the war to expand and Iran oil to be shut off or something like that completely, then I would guess that oil would be able to spike. Again, there's the side-by-side, weekly on the left, daily on the right, and that's what our analysis looks like when we look at that. Let's take a look at the gold market. Now, gold is soaring on the upside, and this, again, we're going to start out looking at the side-by-side. This is a market that has turned very strong. So if I blow this up right here, you'll be able to see that what this gray cycle is a big cycle that has been really in play for a long period of time, going back all the way back. Now looking out into 2018, 2017 here, those were very important, very dominant cycle patterns. But now you can see on the bottom, what we're reviewing are these 45 and 15-week cycles, which now have become unbelievably clear. You can see the minor 15-week cycle that is a 1/3 in the harmonics. So that's 1/3, 1/3, and 1/3. It's very clear, these 3 cycles on the bottom, where the whole big harmonic family is made up of that 45-week and the 15-week. And you can see the low right over here where they both troughed, the low over here where they both troughed. And that makes this bottom over here extremely important and in a very powerful period. Now, it got right over here through that major 61.8%. This next resistance level and what we call the repair level says to us that if it gets through there, which is at around 2030, that absolutely this is proven in here. I want you to see that the upward turn in momentum in there is very significant. Gold looks better than any of the 4 metals that we track. As a matter of fact, copper and platinum are terrible, and silver's being dragged up really by the gold market. But gold is strong all on its own, and all-time highs is what we were looking for into next year. And I think this is really clear when you look at that. And the monthly patterns are very supportive of the same thing. When I look at the daily patterns, these yellow ovals that you see are where the periods of risk come in. That's where there are multiple cycles that come into their troughs. This is where the energy is on the downside, and you can see how unbelievably consistent that is. The low forms right in here, and now we're in the rising phase. This resistance right there from the weekly around 2030. Now, you can see that there's a minor cycle right in here that looks like it's going to pull back in here. And you could get a pullback way under, closer to 1930 before it then begins to move up again. These supports are rising, and the longer it holds up in here and the further it gets, then the higher the downward corrective projection would be. But when we have this downward drawn this way, that doesn't mean you short it. So I don't want people to think about that because, just because we're saying this is the area that could be a correction, the correction could come from way up over here at 2030, and it could decline far less than what the average or ideal decline would be in here. So that doesn't mean you short it because momentum is strong. Slim ribbon PO now turns green, slim ribbon green. And if it has a little bit of pullback in here, you're probably going to get the slim ribbon PO saying there's an upward resumption coming. So this is a very strong condition when we look at the gold market. Again, silver similar, not as strong, and the other ones, platinum and copper, horrible patterns, looking extremely weak. And we'll take a look at Bitcoin. Somebody's asking me, is it now off to the races? Well, first of all, I got to tell you, I'm inherently negative on the cryptocurrency market. I'll tell you why. Because everybody talks about this limitation of 21 million Bitcoins, but that's bogus, because there is the potential to create more variations of Bitcoin. There's well over 20,000 altcoins out there, and there's an unlimited amount of cryptocurrencies that can be created. So it's not about supply and demand. Now, right now, the strength that you see going on in the Bitcoin market is all about the BlackRock cash ETF that is likely going to come out. And they talked about that getting passed right now. So you got to jump up over here to 30,400, which is really not a surprise to us. You can see in here that this weekly chart was suggestive that this was going to go up because it was in this rising phase, as you can see, and momentum strong here, momentum strong right in here. The slim ribbon rarely lies and often gives support or resistance. Slim ribbon PO is green, all of those telling you things that are positive. Now, the way this is drawn, let's see, do I have that? That's correct. The way this is drawn really should really be more like this. So I'm going to change this a little bit, and it really should look something like that, where it would have some minor pullback in there, and then begin to move up again, and this another favorable period. And the resistance is up over here on the weekly, 30,600, which is what we talked about as a projection for the last few weeks. And then up over here at that cycle peak, which is at around 32,000. Easily that could happen in this rising phase. That doesn't mean we're off to the races to all-time highs. This anonymous person in there said, is Bitcoin going to the moon? Well, the moon is pretty far. And I would say that, you know, Bitcoin going to 32,000 will fall short of the moon. In fact, I don't even think it'll get out of our atmosphere. So no, I don't think that's the case. It is setting up bullishly right now, and it is saying if there are pullbacks, they're a buy. Question is, if this ETF comes out, this cash ETF, will it matter, or is just a bunch of hype? We're going to have to wait and see on that. But that's what we have right now. We have a question on natural gas. I'll take a couple more of these, and then I'm going to turn this over to the team. Natural gas is almost unreadable. It's been that way, though. If you look on the left, you can see that uptrend and the minor cycles continuing to make positive configurations. Now you have this big decline that's going in there right now, as you can see that pullback on the daily chart. This 78.6%, you can see that right there. Getting down to that level is not pretty. Once it does that, it says that this peak over here at around 350, which was our target actually, it says that won't be achieved again. Also, you could notice in here that the slim ribbon has now gone neutral, and that you could see that blue arrow there on the bottom. That none of that is good. And if you look here at the timing on the weekly, it essentially just says to us that there's a pretty good chance that if it rallies in here, it will continue to come down again. I don't like this pattern when I look at that, and I would now turn this down right over here based on the fact that we're down approaching that 78.6%. So that is a look at the natural gas market. There's questions out there on the indexes. I'm going to do all of the indexes in just a few minutes. So Arvi, I'm going to turn this over to you and Katie, and you'll be able to do what you're going to do.
All right. Beautiful. Thank you, Slim. Appreciate it. Let's go ahead and jump into some of these questions. First, share my screen. We'll pull up Apple first, and then after that, we'll look at GDX. We'll look at TSLA. We'll look at SMH and FCX, and then I'm going to hand that off to Katie after that. Okay, so let's first pull up Apple. One moment. Okay, so this is the weekly and daily for Apple. Now, Apple has a low that's due 821 to 1023. No obvious low has yet formed. Okay, so we're looking for still now one more dip down prior to forming that low, and then for this to turn back to the upside. Right now we have a higher cycle high, and in all likelihood, a higher cycle low that would form versus that old low. What does that say? That says the odds favor a move back to try for these old highs, which are at 198.23 in that next rising phase here on the intermediate term. Shift over to the daily time frame. So this is getting interesting here. So Apple has a low that is due right around now, right here. So we look for a pop back to the upside and then watch to see if it makes a lower high versus that old high at 182.34. If so, the odds would favor a move back down towards that 78.6 and this old swing low. So that comes in 170.60 to 167.65. Keep in mind there is earnings here, very, very important, but we have a low that is due in the early part of the new month. Okay, so that is really what we'll be looking for here in Apple is a lower high and then a move back to the downside, and then for that next move back to the upside to get underway after that. Now, if this ends up moving through that 185.18 area, let's say we have a move like that, then that would say that the low formed right here. So we just have to see what happens here. But right now, highest odds would be one more dip down prior to turning back to the upside for Apple. Shift over, let me scroll up here to the questions. Shift over to TSLA. So this one certainly looks like we have formed a key intermediate term top now in TSLA. This is exactly what you look for when you form a clear high. You see a rally here, then a pullback. The odds would favor a move back towards highs, but what happened? We formed a lower high here, failed right there versus 281.20, and then have now lost the low. Okay, that is not a good picture whatsoever here in Apple. And it says that this low is not due until 182.26. So what are we looking for? You can see that there's a low that's due over the next, I would say 2 to 3 weeks. Look for a pullback, a little uptick here, then a failure again, and then another wave on the downside. And overall, we're looking for a move down to that 190.16 to 168.70-ish area in TSLA. Sorry. So that's really what we're looking for. Just a series of lower highs and lower lows going out into Q1 of 2024. So not a good picture, and is overall has a bear bias now on the intermediate term. Shift over now to what's happening here. And you can see we have lost now both of these old lows right there and right there. Looking for just a rally here to only fail, and then for a lower low to still form. We're looking for a move down into this zone from 210.33 to 191.50. 191.50 is certainly in play here if it can form just a lower high and then move down as such, with a low that is due right around the next 4 to 5 weeks or so here. So overall bias on the short term is also firmly pointed down in TSLA. Not a good picture whatsoever. Shift over to SMH. There was a question on this. Still seeing a low around 137. I mean, we'll have to see where it ends up forming the low, but let's go ahead and shift over to the weekly. So this one tried to actually form its low early, but then is now selling off. There is a weekly low that is due 918 to around 1030-ish. So we're looking for that to form over the next couple of weeks here. One more hit down, form the low, and then look for this to turn back up to the upside. Keep in mind, what are we looking at here? We're looking at a series of higher cycle highs and higher cycle lows. So what does that say? The odds do favor a pop, and for this to try back towards that 78.6 at 156.5, and then this old swing high at 161.04. Shift over, and you can see right now a clear high that has now formed right there, a failure, and now only a series of lower highs and lower lows that have formed. We have a short-term low that is due, again, not for 2 to 3 weeks. You're seeing a theme here. Many lows are not due for still 2 to 3 weeks. That says the overall bias on the short term is also now bearish. We're only looking for lower highs and lower lows. Now, what are our levels? We are looking for a move at the very least to look back at this old low at 137.76. And it may well move just a bit below that. We'll have to see here in the SMH, but a clear now bear bias on both the short term as well as the intermediate term. Now I'll go ahead and pull up FCX. Make sure I didn't miss anything there. Okay, and then I'll hand this off to you, Katie. FCX, not a good picture here in FCX. Okay, we're seeing a large sell wave here on the downside. There was a low that was due 821 to 10.9. No obvious low has formed as of yet. So we are now looking for only a late low to form and then for this to get a pop. But what has happened here is that now we have a lower cycle low versus that old low there. So it says we would only look for a rally and then for this to turn down yet again like that. Okay, so this is not a good picture here in FCX. If we shift over now, you'll see what's happening here as well. An early high that has formed in all likelihood right there. We then lost that key daily low at 35.03. So what are we looking for? We're only looking for a series of lower highs and lower lows with our next daily low that's due, again, not for another, still 4 to 5 weeks here in FCX. So on any rally here, we'll be looking for this to fail and then to roll down into this zone in blue from 32.46 to 31 even here in Freeport. So a firm bear bias is in place on the short term. And now I'll hand this off to you, Katie.
Okay, let me share my screen. I'm going to start with XLRE. Let me know when you can see that.
Good to go.
All right, sounds good. So here we have, we had a long period of higher highs and higher lows, and then something changed right here in early 2022. We started to break through our key cycle low supports, and we've had a series of lower highs and lower lows. This did attempt to form a basing cycle, but it did retrace all the way down to the 78.6% fib. And then when that happens, the probabilities favor not being able to take out the prior cycle high. And you can see that this got up into that upper resistance zone and then failed from there. And just a few weeks ago, we broke through again that key cycle low support. So this is right about mid-cycle. You can see we have these dominant cycles that are broken into minor halves. And so we may get a bounce up into this area around, let's say 36 and a half before moving down again, probably down to conservatively around the $32 area would be the 100% extension level. And this is due out in January 8th to February 16th. So in the winter is when we would expect for XLRE to form this intermediate low. Now over on the daily chart, you can see what that looks like. Lower highs, lower lows, over and over. We keep stalling in these resistance zones and moving down. We do have a daily cycle timing window that's coming next week out through the beginning of November. And so conservatively, 32.62 is that prior cycle low. We have not broken that yet, but approaching that. And then the next level down would be about $32, that 61.8% fib extension level. So overall, not a good look for the real estate sector ETF, although we are approximately mid-cycle and could get a bounce. Next, we have several of the cruise lines, and they are all not looking very good either. Here's Carnival. This is the weekly chart. We have an intermediate low due out in December, January timeframe. And we've already broken, or we've gotten below this 78.6% fib, just a tiny bit this week. And so we may get a bounce off of this minor third cycle. But again, we would expect that rally to fail and then move down. Here's our prior cycle low at $8.70. So overall, this is looking quite negative. That is the weekly chart. Over on the daily chart, this is what that looks like. We have these kind of large 52 bar cycles. We are in the time frame right now when we would expect this dominant and minor half cycle to make a low and begin to move back up. Again, with the negative configuration, we would expect that to stall in resistance and fail there, moving back down. So that resistance zone currently would run from about 1311 to 1436, with 1525 being outside probability. And this is a declining resistance zone because we don't have our low in yet. So in general, we're expecting lower prices through the remainder of the year. Let's take a look at Royal Caribbean. You'll see much the same thing. This was very bullishly configured cycle, swamped, moved back up, and then kind of failed instantly. Moving down now, again, we have that minor cycle low due, so we could get a bounce, but it would only be probably up into this maybe $95 area at the most. And then moving back down again, same sort of thing. January 8th to February 16th is when we expect that intermediate low to be due, and this major 50 is at about $72. So that would be a conservative target on that. Then over on the daily chart, this is what that looks like. Again, lower highs, lower lows continuing, and we have a daily cycle timing window that is due right around the beginning of November. So looking for lower prices until then, like 77.66 is the 127.2 extension, perhaps down to 72.80, then failing in the next resistance zone and continuing down. These cycles out here would be in sync with the weekly cycle timing window, so we would expect the lows to continue through that time period. Also requested was Norwegian. I only have a good weekly chart on here. This one, the cycle is a little bit longer. You can see this one's not due to bottom until February 19th to March 29th, but it's the same story, expecting lower lows. We have some targets down here, would be 1176, lower than that down to $10.30. I think that was all the symbols I had. Is that right, RV?
Yep,
Okay,
that's it. Great job.
thanks.
Slim, back over
All
to you.
right, super, great. I'll take this back. We're going to turn off all of the questions right now. I do want to answer one more question in here. If we missed your questions, sorry about that. We've run out of time. There was a question about using the Fibonacci retracement tool. Alex put that up, and I do want to answer that for you. I do like using when you're using that tool, going from cycle peak to cycle trough. Now, the question is, can you just use it in the current impulse? Well, you certainly can, but I think that often you'll find that an impulse inside of those periods between the peak and the trough are making up a smaller cycle that's in there. So you can use it, but it's going to be less important. The most important levels are going to come from the very obvious cycle peaks and troughs. And I think that is the best way to use it, because they're going to have the best information in there. So that was the last question that we're going to answer in there. And next time, please do get your questions in quickly, and we'll try to answer as many as possible. Alex, I see the thank you, and you are welcome. Now here it is. We're announcing the new day trader service, which includes the impulse monitor. Just a little bit of background. Me being a trader on the CBOE floor starting in May of '74, I was a market maker, and my job was to make a market. We bid and offer in all of the option classes that I was there obligated to do so. And that's how we would make money, the bid and ask. And then as the markets evolved and things changed, all of a sudden those edges started to go away, especially when we went to decimalization. So instead of trading for eighths or sixteenths or trading for pennies, and a lot of that edge was gone. Then the invasion of the bigger companies into those markets where they had their own traders in every single pit, and they were really tightening up the markets, and it was all about the math and no longer about really reading what was going on in the market, and it got harder and harder as a trader on the floors. It got to be where you had to be a better analyst, and especially over the years, as you got through the 80s and 90s, was really the time when it evolved into the markets being momentum markets. And you really had to understand the momentum in the market. As a day trader, I was certainly that as a market maker. And certainly when I left the floor in 84 and permanently in 91 as an off the floor trader, then it was all about momentum, all about catching the impulses in the market. So as askSlim evolved, we did a lot of things that were really for swing traders and for longer holders, and a lot of the things that we had done were for that style of trader. And then when we came out with the SIR intraday built on 15-minute charts, we really saw that there was a huge demand for shorter term intraday traders. And then I started to think, well, we really need a way to help these day traders out there who are using that service, but don't, in my opinion, have enough information. So I started to develop the Impulse Monitor. That is exactly what it is. It monitors for the potential of a big impulse in one direction or the other. The purpose of it is to alert you so that you can use your own style, your own studies that you use, that there's a period ahead that there may be an impulse, and it likely, if it happens, will be a big impulse, so that you can improve the size of your win. That's the idea. You need to get bigger wins than losses. You need to be able to take the ride and to know when really it's over. When is that energetic impulse over with? And that's why I worked so hard for many months on developing the Impulse Monitor. Of course, with the help of Arby, who was really a super technical guy, and Matt, we worked on this like crazy with our development team, and this is what we came up with. This is the Impulse Monitor as you would see it on our website. What this is looking at is the S&P 500 this morning, and it came in this morning with a impulse condition of negative. The impulse was on negative. What did that mean? That meant the energies were such that the market was likely to continue to move to the downside. And you could see in the change log here at 9:35, when this turns on in the morning, 9:35 Eastern time, that the impulse was negative. This was taken at 10:32 a.m. And you know, at that point, an hour into the move, the market was in bad shape. So that impulse had been on for an hour, and you were catching a pretty good move on the downside if your own tools suggested that was the right thing to use. Here we are at a refresh at 10:39 a.m. Eastern time. And you can see in here that you had that long move to the downside, looking at SPY, QQQ, IWM, and DAI. Those are the two different looks on the website, where you look at just the stock market, really looking at the SPY, or you look at all four of the major indexes right there. And you can see that that had you believing that if you were short as a day trader, well, the energies were still moving to the downside. Again, these are not trade indicators. These are simply condition indicators for you to use with your own work. So you can see on the bottom, you can still reserve for 50% off a first month discount, but there's more to show you. Now look what happened here at 11:14 a.m. What happened was the market started to stabilize and something changed. So the Dow was the first index to change condition. It went to neutral. In other words, the downside impulse ended. If you were short the Dow, well, that says to you, well, it probably doesn't have the energy right now to continue to the downside. The other indexes were still negative at that point. And that's saying, well, the impulse is still on there, but it's no longer on the Dow. That tells you that there is a relative strength change where the Dow is stronger. If you were a pair trader, you might consider that the Dow is the one to buy, and maybe one of the other ones the one to short. The downward arrow says, were energies to come back in the market right now, that a downside resumption is the highest possibility. But this is still a neutral reading. This doesn't say to go short. It says that the energy to the downside on the Dow had ended. Now, were you to be looking at it and wondering, well, what are these different things we're looking at? Here is the legends right in here that you can really see, and you can be monitored on Discord if you set that up, and the team will help you with that. Jason is our lead in there, and you can see this tells you when the impulse is on, the conditions exist for a favorable upward impulse, or conditions exist for a favorable downside impulse. These three right over here are neutral readings. When the impulse, when it's plain yellow, the conditions are just neutral. It's not telling us there's any energy anywhere or the other. And you're probably in a lot of sideways chop when that's going on. When it gives you the upward right over there, that tells you that you were likely previously in a positive impulse, but now it's gone neutral. But we're going to be aware that right now the energies say that if it were to have another impulse, right now the odds that would be to the upside, or right over here, the odds to the downside. These are neutral readings right in here. Again, remember, these are not buy and sell signals. These are not entry and exit signals. These are market condition signals, so that you know when the impulse is likely to start or when it is on. This is what it looks like on your mobile phone. You can see that that app shows you when the highest odds are of a strong intraday directional move. This is what it looks like if you're just looking at the S&P 500. This is if you're looking at all four. And down the road in the next version, we're going to have some of the key stocks on there also. And this is what it looks like if you're looking at the SIR intraday along with it, which is a phenomenal look. And if you don't know what the SIR is, intraday, Matt's going to show you that, but I want you to know that you can still reserve 50% off for the first month through this weekend. This is a one-time offer. Can you imagine an app like this? First month, only $17.50 for you to try it. We're tweaking it now for the next couple of days, so you can still reserve this. Go to the top of the askSlim.com website and sign up, get your reservation in there for $17.50 for the first month, and you'll then be able to explore it and try it out with us as we just refine it and fine tune it right now. Matt, I want to turn this over to you so that you could tell them about the SIR intraday.
For sure. Thanks, Slim. Awesome information. So excited that we are very close to releasing this, putting a tremendous amount of time, effort, into this service. It should be extremely helpful to the process, trade planning process for day traders. All right, I'm going to share my screen here. And I'm going to take us back to this slide very quickly. Because it's relevant to what we've built. And as we indicated earlier, you want to create trade setups so you can put the odds in your favor. And Slim talked about how we do that by determining first of all, we want to have an outlook period that's clearly defined. So this product, this service is all about day trading. So that's what it's been designed for. Then we want to understand what's our directional bias, because we want to know what the trend is for that day. Where's that next impulse going to likely form? And that's exactly what the service is designed to help with. And specifically, the impulse monitor has been tailored with a specialized and complex set of technical indicators that are designed to detect the conditions, as Slim mentioned, for those impulse price moves within the context of the directional bias in that trend. Then we need to figure out what are our key levels. And that's what I'm going to get to next. And obviously you want to have a sense of timing. Slim talked about how the impulse monitor also gives you a sense of timing when that impulse is likely shifting, changing, turning itself off. And as an awesome complementary tool, you're going to have access to our SIR intraday chart stream. Now I'm going to pull over a few examples of this very quickly, and I'm going to talk them through from top to bottom. And I'm going to pull up the live one just so you can see in respect to, in relevance to what Slim was talking about in terms of how the market today obviously had a significant pullback. Our impulse monitor was on at 8:35, and then it started to turn off as it sensed that was changing conditions. And when you pair that with the SIR intraday grid, which looks at the, and I'll show you here in just a second, the 15-minute charts that we have customized and essentially created daily key price zone roadmaps. So I'm going to pull over those right now and give you a sense of this. Okay, so this is from a few different examples here because what I want you to be able to see. Again, this is prepared pre-market. Okay, so you're going to receive this before the opening bell. I put this work together about 4 years ago. Slim asked if we could utilize our swing high, swing low analysis and our fib tools and other proprietary trend and momentum indicators and put that information to work for day traders, and ultimately down the road create our own day trading service. So as you can tell, we've put a lot of time over the last 4 years into thinking through what the service can look like, and many of our premium members do get access to this. But now with the combination of the impulse monitor, you really have a robust day trading service. So essentially what we provide for you is an upside and a downside look every single day. And as I mentioned, it's delivered to you pre-market, so you'll have access to that. There are 5 key components to the SIR intraday grid, and we look at the SPX, the NDX, and the RUT. And this is a live view, webinar view of our annotations that we've done on this on the indexes pre-market. First are the price activation points, and those are the red and green thin resistance or support lines. And once those get violated, that then opens up into an acceleration zone. So as you can tell here, this was just from a couple of days ago, how the S&P acted as it came through the support zone. So it did what it was supposed to do. This is as the support zones get darker on the support side, you can see that the light green and then the darker green, and then you get into that key support zone where you would expect a reaction. So that's what we're looking for when you get into that key support zone, is a reaction out of there most likely. And that's what we see more often than not. And then we had that rally, and as you know, if you're talking textbook technical analysis, a lot of times when you break through support, it becomes resistance. You can see that how the S&P tried to get up here. It tested that thin support line and it just edged its tail on that candle into that acceleration zone on the downside. And then it rallied back up, failed at the top of that support zone, and then we went into another impulse. And this is where that impulse monitor is really going to become helpful, is it's going to turn itself on and let you know that the probability of another downside move is optimal. And then when you combine that with the other information that this offers, you really have what we like to call as a sum of the evidence scenario where you can utilize the information. So this was a really good, I think, textbook example. See what other one I have here real quick to show you like an opposite view, because we don't know, are we going to have essentially that real strong rising day, or are we going to have a downside day? So that's the beauty of our analysis, is that we're bull bear agnostic. We expect that there's going to be, and as we've seen lately, there's a lot of chop, volatility comes into play at times. And how do you prepare for it? Well, again, you have this roadmap pre-market. Then once the market opens, you're going to have the impulse monitor as a complementary tool, really honing in on when those impulses are on. And you can see here is an opposite kind of situation where I'm going to use the NDX though, because this was so textbook. We open the day, we gap down, we get into a support zone. You can see that the lighter green, it came through, it went through the first acceleration zone, and then we hit right on target. Now this, again, this is done pre-market, we're not painting this after the market closes. You're getting this information pre-market. You have access to it then throughout the market session, and it explodes higher and gets through several acceleration zones. Now, if you're more of a day trader who has outlook periods within the day trading scope that are smaller, you can use these price zone roadmaps in combination with the impulse monitor to give you a sense of maybe where you start to pare back that position, or where new opportunities are going to start developing. So you can see here how it came through that light pink first level of resistance, pulled back, but it was still so strong. And it's likely that our impulse monitor would have turned back on and suggested to you another rise was in motion. And then you just get deeper up into near that key resistance where you're likely to have a pullback out of there. Now, as Slim talked about before, when something is in a strong directional move, that doesn't necessarily mean you go short, right? It's a suggestion to you that there is the possibility of a shift in the price action. You can see it did what it was supposed to do. It got into the key resistance and it had a pullback out of that resistance area. Okay, those are two very good examples. Now I'm going to pull up the live grid here. Give me 1 second to pull it over. So you can see this is live. So this was done pre-market. And as Slim mentioned, our impulse monitor started the day with the impulse on. So imagine you have the combination of the impulse monitor with the SIR grid, and you can see how it got through these first layers of support, but then it got right to that bottom of that key support zone, using the NDX here as an example, and it just reversed right off of there. So the impulse monitor in combination with the roadmap here is really going to give you a tremendous amount of awesome information. And if this is going to turn back over, you can bet that the impulse monitor is going to pick up when those conditions are ripe, where that next larger impulse is likely to start to form. And then it's up to you to figure out where your exits are going to be and your position sizing. And it's important that you do have that plan, as it's so critical for us as we talk about the trade planning process, and every trade should have a plan around it. We're extremely excited to pair these up. If I didn't mention it, for our day trader service members, there will be a special Discord channel where you can reach out to me throughout the session. And if you have questions, now I'm not going to be obviously giving any trading advice, but if there are usability questions, I want to make sure that our day trader members do get those answered throughout the session, and I'll do my best to be on top of those when I can. But that will be set up. All right, Slim, back to you.
All right, I am back.
All right.
That was amazing. You know, when I look at what we developed here, and then I watch you talk about putting it all together, I get chills. I mean,
Yeah,
it's
awesome.
It's really great stuff, and I'm really hoping that a lot of people, you know, try it out, give it a good month or couple of months of use, ask questions, see as we refine these things, and really, I believe will be greatly helped by this. This is the new day trader service with the impulse monitor. And also included with that SIR live chart stream, just absolutely fantastic. Again, only $17.50 for the first month. You have to reserve that. We'll be launching it later in the week. And I think that you will absolutely be astounded by how much this helps you with a great understanding of the market. There's some questions up there I see coming about what the cost is. Well, right now we're going to be half price at $17.50. The regular price, of course, will then be $35 per month for the impulse monitor. Not much to spend on the type of information that you will get with this. All right, some of you waited a long time to see the stock market analysis today, and I am going to give that to you right now. This is just some important information about how we apply our analysis and how you then could use it. Especially the greatest thing about is really discussing you taking trade ownership of your own trades, which is a key thing that we talk about in here. All right, stock market, multiple time frame analysis and projections. We're going to look at the Russell, the NASDAQ, the SPY, plus I'm going to do this on the level 4 grid. So that means that I'll be sharing the proprietary indicators for you to see, so you can see where we are in this market. So I see right in there, Ryan says, great show. askSlim is amazing. Thank you for that. And it's about to get even greater. So let's take a look here as we switch over to the level 4 grid. I know this looks wow, what is all of this? If this is something that for the first time that you've seen, and what this is how our level 4 members receive our live charts for them to upload and have our work uploaded to the Thinkorswim platform. That's what we how we offer it, at least right now. Take a look here at the Russell. I want to start here. Now, what we're looking at here is the weekly chart. And you can see here on this weekly chart, I'm just going to grab these cycles right over here, these major harmonic families. Again, this is how we do our analysis. We learn about the energetics in the market and we apply so many other things to it. Momentum, the swing high, swing low levels, the Fibonacci levels, even candlestick patterns, in order to come up with the sum of the evidence. In other words, what is the highest probability? And our highest probability during this period was that we would see a market that would be moving into the downside in the October-November period. Now, this decline, this says end of November to middle of January, and that's because the Russell has different cycles than the S&P 500 and the NASDAQ. So it's important to know that what I'm showing you right here is not going to be exactly what you see looking at the S&P 500 and the NASDAQ, because this still looks like there's more time to go. Remember, I talked about interest rates continuing to go up potentially into late November. I talked about that in the beginning of the show. And the Russell is very susceptible to the movement in interest rates because these are zombie companies. They borrow a ton of money. And that the more they have to pay for it, the less their opportunity of surviving is. So that's why the Russell acts differently often than the rest of the market. So this is what the Russell looks like on the weekly, still quite negative. You could see this is where the reversal scout turned negative way up over here and told you the momentum was negative. Well, that was some fantastic information. Let's look at the daily in here. And on the bottom now, I have the market condition, the option bias indicator. What the option bias indicator tells you is when, if you were, a strategic option trader, how do you want your biases to be? And when it's in here in the green area, as you can see, dark green or light green, it's positive. It's likely to be moving to the upside, and little blips to the downside are likely to not be able to continue going down. And here where it gets to orange, as you see right over here, it warns you that it's an extreme and a top may be forming. And you could see that happen right over there. Now you can see that we have basically 3 tracks that we're looking at right now, and we are in a very oversold condition. That means that you're probably going to get a bounce in here, but it wouldn't make the bottom, because over here we're looking for a short-term bottom to occur out here in late October to the beginning of November. That's very much in line with what we've been looking for. These 3 tracks were going upward until you broke underneath this key level right over there. Now it's on support that comes from the weekly, but that is very likely to be broken. We're projecting down this black with the arrows is what we think the highest probability is, which is a move down to 1655. In here, so if it rallied in here, it would likely just flag and then move down again, just like it did right over here. You can see that. So a bounce right over here would be in the middle of the cycle, not likely to hold. So that is a look at the daily chart with the option bias indicator. Again, if you want to get the option bias indicator, you must be a level 4. Here you have on the bottom the slim ribbon PO and the slim ribbon on the top. And you can get a very stark look looking at this daily chart when it's in positive condition and likely to resume to the upside. These are momentum resumption signals, as you can see in here, or when it is negative and likely to resume to the downside. And you can see the slim ribbon often gives you support and resistance, and each of these rallies failed right in there, and it is still in very, very bad shape. Looking at the 2-hour, which is a great way to get a heads up on swing trading and the conditions in here, the 2-hour is also looking negative, as you can see, and that is very bad shape. Now let's switch over to the S&P 500, and you can see in here that, pardon me, I just dropped my ears. So 1 second. You can see in here that This was the period of risk right over here that we talked about, that when it was likely to move to the downside and continue the bottoming period, as you can see right in here. Now, the question is, was that the low, or was the low going to get taken out in the daily pattern that bottoms in late October? I pretty much thought that it would come down again, but I wasn't sure. Momentum turned down right in here, and you can see it's been negative that whole period. So there are kind of two scenarios in here. Either that's the low, or the low is going to get taken out. And these supports right over here that we've talked about, 4,200 and 4110. That's what we're looking for right there. And that is this period of risk continuing on the downside right there. We talked about the very end of it is often a capitulation, a throwaway in the market, like you had right over there, and you had these few weeks here, and then this big down week right there. And that's may still be coming. We could get another good sized week or two. So again, momentum negative in here. These lines in the bottom are the FXI and the FEZ, and these are pointing to continued weakness out into November, December. So we may not be able to get this rally to really develop in a big way until we get past those periods. And maybe it's something like this minor cycle that you see right there, and then taking off. And we're looking for a better November and December. Hopefully the Middle East crisis will pass without it blowing up the world. And then we'll be looking at a reason to buy. If it blows up the world, well, forget about it anyway. So, but that's November, December into maybe January, looking like a better period. And that, of course, would look like a test of that 4,600 high area. This is the look at the daily in here. And again, we had these going higher, these three tracks right there, but we did lower them because we got down here under the 78.6 and getting down close to where that cycle low is. Again, this trough points to a late October bottom. The question is, will it find the support here at 4,200 or at 4,110 right there? That is really what we're looking at there. Also, you see the big head and shoulders right in here that we talked about so long ago and said that the head and shoulders measurement is down over here. That's at about 4070 if it wants to complete that measurement. The next week to week and a half, very, very risky right in here. And that's likely going to have that capitulation that we're looking at. Note on the bottom, the option bias study, where it was so positive in here. It went very negative, went only neutral, and turned negative again, where it is staying there. And this is telling you, if you're a strategic option trader, your position should be biased negatively. If you're picking on the bottoms, then you're probably in trouble or have been in trouble. Here you can see what we're looking at on the daily chart as far as the momentum conditions go. It neutralized, but then turned negative again, as you could see. And of course, great information. Look at these resumption signals when it was positive. And here it told you a negative condition still existed. It turned neutral and then negative again. Here on the 2-hour chart in the S&P 500, on the bottom here is the market condition indicator. This is a multiple time frame indicator, which gives the important emphasis to the longer inputs that are in this. What this did right over here, it got to the swing zone. And when it gets to the minus 25 to plus 25, it tests it. If it gets up there and fails, it says that the longer term, which is the dominant energy in the market, is still pushing to the downside. And you can see that is a negative indicator right there and warned us that the market was failing again. Look at the momentum, and here is that turned negative. And again, if you're a swing trader, you want to really pay attention to the 2-hour. Let's take a look at the NASDAQ. It is the same story. This daily low projects out to early November. This is coming down. Supports right over here at 14,300 and then down over here at 13,008 1/4. I don't think this could be in play 13,300, but it would take a panic, a pretty good panic if that happened. And you can see out over here, looking past this early November period is where we look at the market to be able to do better. And based on this really small pullback in here, and based on these really good positive configurations that we see in here in these harmonic families, there is a strong possibility it'll get over 16,000 sometime out here late in the year or in the beginning of 24. the only thing that could really prevent that analysis would be a total debacle over these next few weeks, which is an unlikelihood. Of course, again, the Mideast war, something could happen. Here you have, again, this breakdown through the first resistance through the 78.6. Were there to be a rally in here, then it would likely come down the top of this projection, 14,301. This is from the weekly, and then this level down over here at 13,800. So those are what I consider to be worst cases for this decline in here, and only maybe a week to two on the downside. Again, this is a period where there could be a capitulation. Note the option bias indicator, this yellow, has been neutral here for quite a number of days, but as it comes down in here, I wouldn't be surprised if it turned negative. See this dotted line, this dashed line in here? That's the Russell, and the Russell has a significant influence. And you can see in here the shape of this minor movement in here, and the shape of the next minor movement where it needed the Russell to release before it could move up again. And now you can see they're coming down over here into the early part of November. So that's why we think the downside is pretty good probability. Again, it turned to positive momentum for a brief period of time, and now has turned negative again on the daily. Again, you see this test up into the swing zone, and then the failure under it right there, warning you that the longer dominant energies are pushing to the downside. So another great indicator looking at the market condition indicator. That is it. There's your Russell again, and I just showed you everything that I was going to show you on the stock market. Man, this has been an hour and 17-minute show to this point. It's been absolutely phenomenal. Team, what do you got to say about what we did?
A whole lot of fun to engage with our members, the YouTube audience. This has been fantastic.
Really, really good, guys. Thank you all so much. Appreciate it.
Have a great weekend.
All right, that's it. That's the pilot Market Week Live. I hope you loved it. Please let us know if you like us to do this show this way, so that we know we're planning to do this again 2 times a month, 1 time a month, the normal Market Week, and then 1 time a month, we're going to be off. So that is it, team. Thank you for a fantastic job. I love doing this, thought it was great, and we'll see you next time. And by the way, no Market Week show next week. We're off.
Take care, everyone.